Hello and welcome to another Smaulgld live stream. It is September 4th, 2019. It is a Wednesday. Tonight's topic, silver, gold, and platinum in the era of negative interest rates. Now this is a profound change that actually is what I believe is something that will propel the gold and silver and platinum prices higher. As many of you know, I am not a pumper, and I dismiss many stories of people insisting silver or gold set to skyrocket based on silver is rarer than gold, or gold back you won, or Shemitah, or whatever these nonsense stories are the pumpers have at the ready that tell you COMEX is going to default, or JP Morgan is stacking silver. All total BS, no basis in reality. In my mind, designed just to get clicks, designed to sell metal, and we've seen over the last 7-8 years, nothing has happened in the metals. Gold has moved up a bit, and my thesis has been all along that silver was going nowhere and that the gold-silver ratio would go higher if nothing changed. Meaning, unless silver caught some type of commodity bid where there was a massive increase in demand or a massive decrease in supply, which those things haven't happened, despite people telling you, oh, they're running out of silver and this mine shut down. That's just hype. Same with the electronic story. They are finding more uses for silver every day. That story. The demand for physical silver for electronics and other industry has not risen. In fact, for electronics, it's gone down the last 10 years. It has gone up for solar. The point being is that silver was going nowhere for a reason. Despite all the silver is rarer than gold, and we could not lead our lives without silver. And silver is the only asset worth praying to. That type of nonsense. And again, if you want to go to those channels and you feel good about listening to that, there's 20, 30 channels. You can go silver this and silver that. And you can insist that the rest of the world doesn't understand and that silver is destined for this and that. I've never done that. That doesn't mean I don't like silver. I don't understand the attractive elements to silver. But I like to look at the numbers. I like to look at the supply and demand. I like to look at the COMEX. I understand there's manipulation, but I also understand that there's a lot more to silver than just it's wonderful and it would be higher but for manipulation. If it was that great, it would have gone higher even with manipulation. And we've seen gold and silver have gone higher at certain points, blasted through all types of support, silver in 1980 and 2011. Okay, so where are we right now in all of this? Well, last year, in December 28th, I believe, I asked the question, what's going on with silver? Where do you think silver will go? Is it going to stagnate? Is it going to be another year like the last few years where nothing happens? Is it going to go up a little bit? Is it going to go up a lot? Or is it set to skyrocket? Now, my answer was set to skyrocket. Now, you would say, well, that's ridiculous. The way you talk about silver, you're always bashing it. No, I don't bash. There's nothing to bash. If you actually believe someone's insulted your silver or someone's insulted your gold, then really you've gone overboard. I'm insulting the pumpers. I'm not insulting the metal. And that's what happens. The pumpers get you to believe that the metal itself is worth deifying. And then you have to defend it. If people call me a turncoat, like I've gone away from the religion of silver or gold or whatever it happens to be, merely for discussing cryptocurrencies. And so those of you who listen to this channel, you know that I don't adore assets. I don't believe in single asset theories. I'm not a Bitcoin maximalist. I'm not a gold only. I'm not a silver only. I'm not a Litecoin only. I'm not anything only. I like to look at things, and everything has a value, and everything has a relative value. There's no such thing as one one asset to rule them all, and all you need to know is silver, or all you need to know is gold, or all you need to know is Bitcoin, or whatever it is. I don't think that way, and the world bears me out. There are people who buy other assets. There are markets for many different assets. They all have different values. And actually, let's just take a look before we get to my original prediction for 2019. The asset that has done the best the past 10 years in the precious metals has been palladium. But palladium is not money. Who cares? Palladium has done the best. If you were paying attention to palladium, you would have done well. You know what's done even better? Rhodium. Rhodium's not money. Who cares? If you were paying attention to rhodium, you would have done well. What's happened is people get this somehow that the most important thing something can be is money. And again, when I discuss why gold and silver, I believe, are not currently money, and it's not an insult. It's really just saying that gold and silver do not trade as medium of exchange, even though they are divisible and fungible. They are not readily accepted everywhere, and they don't act as a medium of exchange. That doesn't mean I hate gold and I hate silver and I should be thrown out of the club. It's just factual. Now, the fact that they're not, quote, money by this definition doesn't mean they don't have value. And I've stated what the value of gold is, and I've stated what the value is of silver. Silver's is mostly a industrial metal, a silverware metal, a jewelry metal, and then finally an investment metal. But a very small percentage of silver is an investment metal. Gold is a mostly investment metal, little industry, and a lot of jewelry, and some of that jewelry is investment. So it's mostly an investment metal. And that's the point why gold had to go first. And why do I say gold had to go first over silver? Because silver, on its industrial and its silverware and its jewelry, the trend was going nowhere. There was enough supply coming on board, and there was not that great, there was no growing demand on the industry side. However, silver does have a monetary component, small but, or investment component, where people actually buy silver for investment. Large institutions, they don't buy silver for investment. For the most part, they buy gold. However, once gold catches a bid, the silver investment portion of its demand component, if it gets lit on fire, well, then it can drive the entire price of silver. And we've seen that before. So that's what's happening right now. But here's just a chart here showing US dollar, palladium price per ounce. There's your big winner. So if you're obsessed with something being money, or you're obsessed with something being, or you're obsessed with the collapse, or whatever it is, you can go to these single issue channels and just listen to the same drivel day after day. I try to provide a much broader perspective than just pumping gold or pumping silver or pumping Bitcoin or pumping Litecoin or pumping, I mean, there are no platinum pumpers, but there are no palladium pumpers. Well, they would have come out really well if someone had pumped palladium. Look at that. You would have done very well over the last 10 years, going from $200 to $1,500 instead of holding on to silver from $50 down to $16. But I do digress. What I want to talk about tonight, though, is what's happening with gold and silver because of this negative interest rate and why this is the big deal. The other night, a few nights back, we talked about where to park your cash as a person, just an average guy hanging around with some money, and you realize that putting money in the bank is a losing proposition. So we did a YouTube, I think it was called, and a bit shoot, Banking Alternatives. And it was banking alternatives, saving in a negative interest rate environment. And I came up with some help of the Smaulgld Mugs stackers, some places where you can put your money. It wasn't investment advice, and nothing in any of these videos are investment advice. They're just general observations. I don't talk about individual stocks. I do talk about gold, silver, and the cryptocurrencies. What I do try to sell, indeed, are mugs, but let's put that aside and talk about these banking alternatives where an individual could have stacked cash. And we talked about gift cards, I mean, if you get a gift card that doesn't have a fee on it, and you're going to go to that particular store or use that particular company's services, you might as well store some of your cash in a gift card. Obviously, you can store cash. You can actually go out and get nickels and pennies and hold on to them. They may even rise in metallic value. A pre-1982 penny is worth 1.7 cents. A nickel is actually worth 4.2 cents at the moment. And we know that Kyle Bass bought $1 million worth of nickels from the U.S. Treasury and had them sent to his house, but that's probably pretty unrealistic for most people. We talked about holding on to stable coins or buying liquor in different types that you can store: whiskey, cognac, vodka. We talked about medical supplies, aspirin, Band-Aids. Ammunition is a good one. You could prepay some bills. And then the final one was, I thought, forever stamps. That's a great buy, because the price of stamps is going to go higher, and if you buy some now, you'll always have stamps. Now, tonight we're going to talk about what are institutions going to do. They can't. Where are they going to put their clients' money? They're not going to go out and buy gift cards. They can't stack cash. They're not going to do what Kyle Bass does and go get the pallets of nickels and pennies. They're not going to go out and buy pallets of whiskey or cognac or vodka. They're not going to buy boxes of aspirin or Band-Aids. Certainly they're not going to stack ammo and have like a cache of weapons. They're not going to prepay bills, and they're not going to go out and buy forever stamps. Okay, so that may be what your average Joe can do. Like, we can go out and you can easily spend a few $1,000s there and not keep those $4,000 in the bank. And you can live off of prepaid cards, and you can have your electric bill paid forward. You can have some medical supplies. You can have an Amazon card that you can draw down on. But again, those are just for, that's nickels and dimes or pennies and nickels, as we were talking about. But there's a real issue for institutional investors, and that issue is, where are they going to park their money? Now, we talked about a few days ago as well that the big hitters, the Beds of the Levant, they are out in the Hamptons. They were having their final summer flings, and they were getting ready to come back post-Labor Day and redeploy capital. Well, they come back, and a lot of their options are, where are they going to put their money? Where are they going to put their clients' money? And if they don't know where they're going to put their money, where are they going to store it? Well, they're not going to, as we said, they're not going to buy nickels. They're not going to buy frog stamps, forever frog stamps. They're not going to buy ammo and so on. They're going to buy gift cards. So they got to put it somewhere. And now we see that over a third of the debt in the world, it's like $17, $18 trillion, is negative yield. There's not too many places. And we talked about, for the individual the other night, we were saying that, maybe they're going to be putting it into gold and silver, possibly Bitcoin and Litecoin. We're going to talk about the difference between, there's a huge difference between gold and silver and Bitcoin and Litecoin. But when your individuals are getting paid a negative rate of interest, obviously the institutions aren't going to do much better. And it's no hidden secret anymore that negative interest rates are not some strange concept that may happen one day in the future. They're here in a big way, and they burst upon the scene just in the last 3 or 4 months in a big way, going from like 8-9 trillion to 17-18 trillion, quick, fast, and in a hurry. So where does the institutional investor or fund manager or hedge fund manager put their capital? Well, I say negative global interest rates means there's going to be an increased demand for United States treasuries. Why? Again, this ties back to a thesis I've had since 2013, why the Fed would stop QE, why the Fed would raise interest rates. Not they could never raise interest rates, as all the other gold pumpers said, and then predict an imminent collapse, because if they did raise interest rates, the whole economy would collapse, and then they would go negative, and then they would go to QE. Yeah, well, I said the Fed wasn't going to do that. The rest of the world's going to do that, and that's exactly what happened. The Fed didn't do it. In fact, the Fed went the other direction. They stopped QE. They raised interest rates. They raised interest rates 8 or 9 times. They sold off some of their balance sheet, while the rest of the world went into a printing frenzy, buying corporate bonds, buying their own bonds, like the Bank of Japan, like the ECB. China went more nuts than any of the countries, any of the central banks combined. They built bridges to nowhere. Belt and Road, they wasted so much money creating non-viable, non-market-based projects, all debt funded and funded in US dollars. So the point is that the reason the Fed did that was to create demand for the dollar, keep the dollar at a positive rate of interest, meaning that if you buy treasuries, remember this whole de-dollarization and dumping treasuries. Well, they may want to de-dollarize, but when they denominate U.S. treasuries, just a fact, it's not. And that's another thing. People think, oh, you're a shill for the dollar. No, I'm not. It's even ridiculous to even suggest that my job is to shill the dollar. There's a point we're going to talk about later. We're talking about the future of Smaulgld. A channel with 3,800 or whatever I have subscribers and 21 patrons is not shilling. It's not an effective shill for any particular point of view. So it's the height of stupidity to even suggest that somehow I'm a shill for the dollar. No, I'm just analyzing things objectively. I'm not brainwashed into thinking that the dollar is the root evil of all the world and I'm out here defending the dollar. No, I'm not. I'm pointing out I have the same issues with the dollar that everyone else has, but I also are looking at not just focused on hating the dollar, but looking at the entire totality of the financial circumstances is the United States treasuries do pay a rate of interest, and there are far worse currencies out there, and there is a demand for the dollar, whether there should be or not, according to the pumpers, there actually is. And despite this concept everyone is de-dollarizing, no, they're not. The dollar is in demand, and there is demand for treasuries. It's held as a reserve asset. There's no demand whatsoever for the Chinese yuan, gold-backed or otherwise. So in any event, what's happened now is the treasuries, the United States, through the Fed, has reestablished whatever faith that it had begun to lose when it started QE. And the way they regained that faith was they allowed the others to do a lot worse. ECB went out and did QE at a rate much worse than we had done, than the United States had done. They're at 5 point whatever trillion. Christine Lagarde today said we need to keep highly accommodated policy for the foreseeable future. Meanwhile, the Fed is supposedly was doing up until a month ago, tightening. Point being, the United States dollar and the treasuries are where idle money goes, especially in a negative interest rate environment. Now, does that mean I believe that the United States is on solid economic footing? No, but it is on more solid economic footing than the rest of the world, given that the financial world relies on dollars. And given that the others all are borrowing in dollars and owe dollars, and their own currencies are depreciating against the dollar, and their own bonds don't pay a rate of interest in their own depreciating currency. So think that one through. You're better off having dollars, and you're better off having dollar-denominated treasuries paying you interest. That's a fact. That's not me shilling anything. Okay, now, so put yourself now in the mind of you're not the average Joe. You're not buying gift cards. You're not buying forever stamps. You're some kind of big shot fund manager, and you don't know where to put your money. You're formulating a strategy. Do I buy equities? Do I buy bonds? Do I buy, dare I say it, precious metals? Do I dabble into cryptocurrencies? What's the decision tree? All right, well, I don't know what I'm doing. Meaning I'm not sure where I want to put my money. I want to see how this whole thing plays out. I want to see what the Fed does. I want to see what China does. I want to see the outcome of the trade war. I don't want to put any markers down just yet. Okay, any big markers. You buy U.S. treasuries. That's somewhat of a no-brainer. Or you just stack up on dollars. Again, because you can't buy gift cards. You can't buy forever stamps. You're not buying ammo. All right, the other place you can go is U.S. stocks. Because for better for worse, even though, as far as I can tell, some of those stocks are ridiculously overvalued. They have no earnings. They're still doing IPOs. They're still throwing crap out there, and it's getting a valuation. All right. Swiss National Bank buys them. Foreign capital buys them. Why? Because what are they going to do? Put it in their own country's currency that's depreciating? Put it in their own country's treasury bonds or some corporate bond that's at a negative rate. No, they figure there's some juice in the stock market, so they put the money in the U.S. stock market. Those are the three big places where the big shot coming back from the Hamptons is thinking about putting their money. Already has their money there and has parked it there. But that can't go on for too much longer. Why? The U.S. Treasury pays a rate of interest. The yield curve has inverted, but doesn't pay that much. And the dollar is strong, but can't stay strong forever because a strong dollar really wreaks havoc on the global financial system because it's the reserve currency. All the emerging markets are borrowing in dollars, which means they need dollars. But if the dollar is strong, it's too expensive for them to accumulate the dollars to pay the debt, so they start to have problems and they start to default. The dollar is too strong, it causes problems for the United States exports. So a strong dollar is not in the interest, a really strong dollar, a hyper strong dollar, is not in the interest of the United States or the rest of the world. So something's got to give. Trump has been yelling and screaming at the Fed, what the hell are you doing? We shouldn't be raising rates. We shouldn't be tightening. We should actually be cutting rates quick, as fast as we can. All right. Well, that means that the idea that the dollar is a safe place to store wealth, it can't last because there's a limit to how far the dollar can go, the dollar index, how much of a spread you can have between U.S. treasuries and the rest of the debt in the world before you have big problems and before the Fed acts by cutting rates or Trump does something like an executive order, who knows, in order to knock the dollar down, or they both act. Well, what happens then? Money's got to go somewhere else then. Well, you say, well, there's no place to go. We'll put it in the stocks. Stocks, they're always going higher. The United States always juice up the market. Yeah, but there will come a point. And the interesting thing about stocks is we've passed the point of no return. We've seen a company like Tesla, companies like Tesla, not picking on Tesla particularly, but we've seen these companies with no earnings stay public and keep valuations in the multi-billion dollar. So you have these companies out there, people are willing to buy them, and if that's the case, there does come a point where, just like the dot-com bubble burst, this is now the everything bubble, people wake up and they say, so why do I own this stock? It has no earnings. The company doesn't even project to make any earnings. So it makes revenue, but those revenues, in order for them to grow the revenues, they actually have to expend more in expenses to get those revenues. Why do I own it? Now you've got a real dilemma. Where are you going to put your money? Now, this is where gold and silver come in, platinum as well. Not Bitcoin, not Litecoin, not Ethereum, not cryptocurrencies. Gold and silver come in, especially gold, in that this is what Mobius was saying. You should be buying at whatever price. And again, this isn't investment advice. This is just factual. Gold doesn't pay interest. Really, you don't increase the amount of gold every year through mining. There's a limited amount of gold. Gold historically is an anchor, insurance against all the stuff that's going on. And there's a limited amount of it. Well, I would imagine that that's on a lot of fund managers' minds, is a lot of banks' minds. James Henry Anderson and I talked about this yesterday. I did put up on YouTube, it's been on BitChute since yesterday. This morning I put up our interview on platinum. Banks now, central banks can always buy gold. They always have. That's not been an issue. Basel III didn't change that. But banks, commercial money center banks, can now add gold and store it just as if they were holding on to treasuries or dollars. Now, I haven't seen anecdotally or any specific empirical evidence that they're doing that, but I would imagine it's logical for them to do so. I mean, especially, maybe not right now, but if the Fed acts and starts cutting rates and the dollar starts to go down a bit, and they may start moving into gold. I think your average investor, large-scale institutional investor, is also looking at gold and saying, at this point, why would it go down? Now, you would say, hold on a minute, we've got history as a guide here, and I'm going to say this time is different. Why? When gold and silver peaked in 2011, it was very obvious that the Fed, the Treasury, were very concerned about the dollar. The United States, they were the ones doing QE. There was no European QE. Japan had its issues with trying to juice its economy. Bank of England, all the countries were not the other central banks were not the first countries to bring everything down to zero and to start printing money. That was the U.S. China followed. China eventually outdid all the countries combined, but the United States was the one where it kind of, quote, shocked the world. China definitely took notice. The other countries noticed that the United States was a big problem because they were supposed to be the store of value, the reserve currency of the world, and here they were on a massive debasement scheme with QE and zero interest rates. Okay. The U.S. knew that. The Fed knew that. But they felt they had no other choice than to engage in this quantitative easing, buying you, monetizing debt, and also buying the agency securities dollar for dollar, full 100% on the dollar from the money center banks like Goldman Sachs and JP Morgan. And that really did annoy the rest of the world and really called into question the stability of the dollar, the future of the dollar hegemony, and so on. And that is why I said they would stop at some point. And that is also why it seems, there's no direct evidence of this, that there was an intervention when gold and silver really started to take off, and they both got capped. And they got capped in 2011, and then a year later, gold was still relatively high in the 1800s, down from 1911. But when QE3 came out in September 2012, they got capped right after that, early on in 2013, and then they were gone. And the reason for that, I believe, is the announcement of QE3 probably would have done in the dollar if there weren't a lot of indications from the Fed that they kept talking about, we're in recovery, and we're going to stop this, and we're going to taper, and then we're going to raise interest rates. I think they yacked their way into regaining some confidence, and then what happened was they gained that confidence. The dollar and the silver went down. They stopped doing QE. They started talking about raising interest rates. They finally raised interest rates like a year after they ended QE, and then they raised them a lot starting in 2016. This time is different. Back then, they did not want the dollar to fall. They did not want gold and silver to rise. They got capped. The reason it's different this time is gold and silver rising right now, that doesn't bother the United States. Doesn't bother anybody. Why? They want the dollar to go down. In fact, the dollar has been rising during gold's bull market. That shouldn't make any sense, but it does make sense given that it basically means that there's still demand for the dollar because all the other currencies are depreciating. They have to use more of their currencies to buy the dollar to pay off their dollar-denominated debt. And therefore, the dollar has risen. But as we mentioned, if you're looking at this little tweet here, go above there, yeah, the dollar can keep going higher without there being damage both to the United States and the rest of the world. And if the United States can act unilaterally, either through the Fed or presidential executive order of some kind, they will. It's inevitable that either the dollar stops rising, it just can't keep rising, or that there's an intervention. And then that means if they don't want the dollar to rise any higher, there's nobody who's really going to stand in the way of gold and silver. At least in my opinion, I don't see any reason why they would try to cap gold or silver. It's not a threat right now. In fact, it helps. It shows that the dollar is going to weaken against gold. Remember, gold has hit all-time highs against every currency now. Every currency, other than the U.S. dollar. There was a time period 3-4 months ago. It was half the currencies, half the major currency. Well, it's blown past all of that. Now, silver, not yet. And let's take a look now at the issue with gold and silver and the gold price here. So today we had a gold price rise of only 0.31. And remember what we always talk about in the thesis that I have about gold having to go first and gold having to get into a sustained bull market. Maybe I say it had to get to 1500, it had to keep that. That would mean there was a gold bull market, and then silver's monetary component would get lit, and because it is a smaller market, that silver would start to outperform gold. We've been seeing it now for the last 2 or 3 weeks. Gold will go up, but silver will go up further. And that means that the unsustainable gold-silver ratio actually starts to come down. Another thing that I predicted would happen, but only if gold rose. The gold-silver ratio was never going to go lower on the fact that they are finding more uses for it every day and that people use it in yoga pants. That was never, ever the reason. Or silver is used in electronics, or silver is at the bottom of an inverted pyramid. That is not what was ever going to drive silver higher. Still isn't what's driving silver higher. What's driving silver higher now is that it is a metal that is catching attention because not only is there a demand now for silverware and jewelry and the general industrial uses, but there is now investment metal looking at it and saying, it's kind of like gold. It does have a limited amount of above ground and below ground supply. It has a monetary history. We're not going to buy it and spend it, but we can buy it and hold it. There's silver ETFs. They're easy to buy. It's easy to buy physical silver. You could buy COMEX contracts. You could take delivery, and people do that. So silver starts to look relatively, and again, it's a relative attraction to gold, but on its monetary component. Gold is generally almost all monetary, or a bulk of its demand is monetary. Silver is not so much, but hey, if gold is going higher, and gold has been going from, if you look at it, let's look at a longer term chart, what happened to gold over the last year. Let's look at the last year. Gold's looking pretty good. It's been from under 1180, and it's going on all the way up to 1550. And over the last 10 years, obvious that gold has broken out. It's, that's almost 1600. Today was at 1550. And gold is clearly now in what I call an established bull market. And now is when I said the attention would turn to silver. And that's what's happened. Look at today's silver price. Gold was up 0.31%. But today, silver was up nearly 2%. Yesterday, silver was up 4.3% and gold was up 1.5%. You're going to see this. If gold continues to rise, you're going to see silver 2x and 3x each daily amounts. When that doesn't happen, then there's an issue. If gold stops going higher, you're not going to see silver run past it and continue to rise. That might happen just on momentum for a week or two. But if gold suddenly starts getting capped and goes down, then silver's not going to keep running higher. But if gold grinds higher, as I believe it will, based on what we were talking about, that where else are you going to park cash? Well, then silver will start to become, I'm a little speculative here. I think I might want to ride that potential silver rocket if gold continues to rise higher. So clearly you're seeing exactly what we've been talking about, where silver actually outperforms gold, but only because gold is outperforming. When gold does nothing, silver actually goes down. When gold goes down, silver goes down even more. But when gold goes higher and stays higher, silver goes even higher. That's just what I see by watching these charts. It's not nothing to do with yoga pants or silver is rarer than gold or gold in the Grand Canyon. It's got nothing to do with any of that. All right, now, platinum, the same thing. People are looking at platinum. I try to get people interested in just discussing platinum for the last 6 months. No one wanted to talk about it. It's finally started to move, same basis. Now, platinum is not money. Platinum, however, if you go back, I'm not going to do it tonight, but if you look at the interview from last night with James Henry Anderson, we went through a lot of charts, and we showed how platinum and gold pretty much tracked each other for the last 50 years, with a couple of exceptions. But you can see since 2016, there's been a divergence Usually platinum for the last 50 years is more expensive than gold. For the last 3 years, it's been a lot cheaper. Like 1.6, 1.7 times gold is worth. It's almost 2 to 1 at one point. And now platinum is starting to play catch up. And again, I think it's simply because there's a value. People are seeing the value in platinum. Similarly, they're seeing the value in silver because silver is like gold. It's cheap gold, even though it really isn't cheap gold. It's got characteristics like gold, and that's very similar to what we're talking about with platinum. Platinum is not gold. Platinum in some respects is, some people think, there's a platinum card. It's ahead of the gold card. When people buy rings, they used to think buying the platinum is a better ring. 7 months ago, that's why I didn't cover platinum 7 months ago. 40% didn't want to hear about platinum, and a lot of people didn't want to hear about platinum. They still don't. If you look at the numbers of people who are watching the Smaulgld videos, I don't care if you want to watch platinum or not, but it's interesting that people are not interested in platinum, even though there's an interesting story there. I think it's because they rather hear just about silver, they rather hear just about gold, and I'd rather hear about something that's interesting. And if if platinum happens to be more interesting than gold in a particular week, then I'd like to talk about platinum. And some people do like to hear it. But let's go back to 2019, just so people understand the way this channel works if you're listening for the first time. I did say at the beginning of the year, I asked the question for discussion, what will happen to silver? Now, at the time, silver was about $15 an ounce, and most people thought, that took the quiz, almost half, that it would go up $1 or $2 or $3. Very few thought it would go up a little bit. 33% thought it would go up $3 to $7, but skyrocket over $7, only about 10%. I was one of them, and you listen to that video, you'll hear my rationale why I thought silver would skyrocket. And you think I'd be the last person to say silver skyrocket because you think I'm bashing it. No, I'm not bashing it. I bash the pumpers. Tossing Maltas, I saw a comment, you shouldn't be bashing the pumpers. No, I'm going to bash them because they repeat themselves and people follow those narratives, and I'm trying to draw a distinction between what this channel offers, and maybe Tossing Molotovs understands that this channel offers an alternative. I'm looking to talk to new people who may be listening to this and maybe for the first time, and maybe thinking that all the information they've been receiving from these channels has been accurate. I do like to point out that they're the ones who promoted the gold back yuan, game changer, Shemitah, all these nonsense stories, JP Morgan. I'm sorry, these are the stories that people have ingrained in their heads and believe are true. So I have to point those out because they're the people who said the Fed could never raise interest rates. I have to point out the distinctions between my type of analysis and what the rest of them do, unseemly as it may be. All right. But here you go. Here's Ann Holloman was asking. She's saying silver to skyrocket to 21. I hope you are right, Lewis. Yes, that is correct. That is what I said. And, we might get there. We might not. But it's on the basis that if gold continues to rise, I think silver will get there. And if gold, goes 1800, well, then I think that you are going to have, gold starting. I don't think silver, and you don't really want silver to go to $50 an ounce if gold goes to $1,900 an ounce, because if it does, if it goes up on that type of vertical, it's just going to come crashing down just because anything that goes up like that, we've seen it in Bitcoin, we saw it with silver in 2011. When something goes straight up, it comes straight back down. Here's a chart. Look at this one. This is rhodium. Rhodium went to $10,000, and then rhodium went to $10,000 and then crashed to $1,000 in 2009. Look at this. This is a Kitco chart. But since then, it's gone back to $4,000. So very interesting. You do not want something to go straight up in the air. So I would think that silver may grind higher at a faster pace than gold, but not necessarily shoot straight up. And I think that would actually be good long term. And James Henry Anderson from SD Bullion was saying he thinks that he didn't say that he thinks that that'll cause the price to not rise as fast, but what he was saying is there's a lot of people who purchased in the $30 to $50 range that as soon as it hits their get their money back point, he thinks they're gonna start selling. And I don't think that people holding on to physical silver selling into the market is really gonna slow down if there is a bull market in silver. But I do think it shouldn't rise as fast, and it probably won't, not because people are selling, but because maybe the FOMO won't be there. But who knows? You really can't tell how people are going to react in this negative interest rate environment. You might have an even bigger FOMO than you had in 2009 to 11. Because as I said, back then, there was at least some breaks that the U.S. realized they were in uncharted territory. They didn't want to do QE forever. You know, it's interesting. We did have this other one, this video that we did talking about the minutes from the last Fed meeting. And again, they were saying, yeah, we could have done more. We learned how to do QE, and as it turned out, it didn't turn out that bad, and we probably could have bought more assets. We're looking forward to the next meeting when we all can get together and figure out how we can buy more assets, what other assets we can buy that we didn't buy in 2009 to 2012. So they are interested now they're actually saying we learned how to drive drunk. We want to get drunker. We wanted to base more because this works. That's their mindset now, is that printing money, going into zero interest rates, going to negative interest rates, buying assets, not just bonds, but equities, it actually works. So they want to debase. And that's why I think it's possible that this could really drive the gold and silver prices higher. Now, before we get off the line here and take your questions, the difference with cryptocurrencies, they may also catch a bid. And some people, some fund managers, I think they're misguided, but that's not going to stop them from doing it. What I think, if they think that they're going to put money into cryptos because there's some type of store of value, I don't agree with that. But it's the fact that some people actually do that means that money flows in to cryptocurrencies, especially Bitcoin, as a store of value. That's why they're buying it. There are going to be some fund managers, in my mind, as deranged as they may be, they will put money in there, and that will mean that they're putting money in on the basis of it's a store of value. That actually makes it a store of value, other than what happens to the price. If the price doesn't react and actually goes down after they put their money in, their investment thesis that they're putting money in as a safe haven goes to hell, because the value of it goes down. However, I think more of Wall Street will put money into cryptocurrencies not because they believe it's a safe haven. There will be some people that will do that, but I believe they will be putting in their money because of it. Let's go back to our original. If we go back to the chart, or not the chart, but the tweet, the first two where people are putting money, big money, going into US dollars, US treasuries, are for risk off. They just don't know where to put their money, so they put it there. If you want to get a little pop, though, for your money, you decide, I'm going to put my money to work. I need to get a rate of return this year. I need to show my shareholders that I didn't just park my money and get 1.3% on a U.S. bond, but they actually got them 7-8%. Well, they're going to put it into stocks. But we've already talked about the issue with stocks. I mean, how high are they going to go? Well, they may worry about that too. They may see some failed IPOs. They may see that they can't rise forever. Well, that's when they would turn to the cryptocurrencies. Not for a store of value, though we say some might put it in for a store of value, but for the speculative risk on. Hey, they've got this new backed platform that's set up for institutions to buy Bitcoin stored in some regulated storage facility, and then you can trade on the New York Stock Exchange backed Bitcoin physically delivered options. Why wouldn't a few people try that and put a little money to use? I mean, you could buy stocks, but they may have already run their course in valuation. This is something also that I said 2 years ago. I think the name of the article was that Bitcoin is a dirty business and the bankers want in. Why do they want in? They can't keep pumping no profit IPOs forever. And they also know there's a limit to how far up equities can go. They can pump this new Bitcoin crypto thing as high as they want. So I think money will go into that too. So just to recap, this global negative interest rates means for a short period of time, it will be money going into the dollar, will be money going into treasuries until the Fed acts or Trump acts or both of them act, and money will flow into U.S. stocks until they're well overvalued past where or I think they're already overvalued as it is. And then where does your safe money go? I think gold is the obvious place. Secondarily, silver is kind of cool now because silver covers your base for store value-ish, but it also is risk on. See, silver is going to act like a stock more than gold is because it has the potential to have an outsized gain. So you might see fund managers throw a little more into silver. Same with platinum, very small market, very undervalued versus gold historically. That may catch a bid. And then if somehow something changes on the industry side, then platinum could get a bid against palladium. But the other thing is, I saw the other day that Japanese are buying platinum jewelry again. So there's not much platinum. Now remember, this relative rarity argument I've never liked because platinum is less available than gold by 10 to 1, but the price of platinum isn't 10 to 1. However, if we do get a big investment bid on platinum, it could easily outpace gold, just like silver can outpace gold. Now, as to Bitcoin, Litecoin, Ethereum, I think you're going to see speculative money. However, I think if things get really bad, and I don't know what caused that other than maybe China bursting at the seams, that's when you'll see whether people would actually put money into Bitcoin and Ethereum and Litecoin, or they would actually just pull everything out and put it into gold. I don't think the whole world is ready just to say, throw in a towel and put everything into gold. So I do think that assets that aren't the debt instruments are the ones where some capital will flow. But let's see what you guys are all thinking in the comments section. And I'm going to put up the pitch for patrons because the future of Smaulgld. I'm not sure, if I was looking at some data and what other people make is really irrelevant. But I do see that it is possible if you pitch patrons that you can get them. And there are many channels that they may have more subscribers than me, but they have multiples more patrons. And again, I get not complaining, but I enjoy doing this. I appreciate all the patrons that do donate, but it is $90 a month. And there's more than $90 a month worth of work that I put into this. And I do occasionally get some very nice one-off donations. But just so that you know, rationally, it doesn't pay for me to do this. I could be doing something else. So just keep that in mind, and I hope you do consider becoming a Smaulgld patron. The other thing I learned as well, which was interesting, is some of the patrons do not want me to go private, would prefer me to stay public in just kind of the way we're doing it now, meaning stay on YouTube and not go into a private style patron only. So I have to keep that in consideration. So if you want me to stay on here, then I guess I don't know. We have to work something out. So here's the fundraising page. I do appreciate all the donations by Bitcoin, Litecoin. I really appreciate when people send me notes and items of value. With that, I do have a P.O. box. And of course, PayPal works, Subscribestar, and you can always support Smaulgld with the famous Smaulgld mug that we have, your stacking mugs. I do want to get to your comments here, and let's have at them. David Cox, you were sounding enthusiastic about the gold silver price in the James Anderson interview. Yep, I was. So you think FOMO will hit in 2022, 23? I think that was James was saying that. I think James has this rosy forecast, I believe, for the next 3 or 4 years. I'm looking at it as this year. I think gold is going to react, has reacted to these events more than any other, much more than silver and platinum. Palladium is a separate issue, but I think if gold leads and establishes itself even more, then I think the others will follow. Great work as always, he says. Yeah, and I did an interview with SD Bullion back in July, and I think that one was called Smaulgld Gets Bullish on Silver. So, and I say people mistake a realistic assessment for bashing. I bash the stupidity of the pumpers, not the asset itself. Despite what Tossing Molotov says, that's how I'm going to do it. I will bash the pumpers, or at least draw a distinction between nothing personal, strictly business, but nothing against them. It's just that I need to draw the distinction between the value of what I do. Some people realize the value. Some people just get mad and they say, "What's he talking about? I heard on this channel this, and he's not making any sense." Okay, Joe Smith is here. DW is here. Fiona is here. Paul Galligan is here. Hola, and Philip Quinn, and all right. Joe Smith, why are you close to your cutoff? Shouldn't you keep stocking? You guys are just saying. Philip is very concerned about his role of war nickels. He's been buying those war. I like war nickels. By the way, war nickels, I think you still can get them at spot. And the reason for that is that they're not all silver, and they have in them other metals, and because of that, they're not good for melt. See, what's very nice for melt in a what's the word? In a dime, a 90% dime, a 90% quarter, is that they're 90-10, and there's copper and silver in them, and they could be melted or set up to do that. But the wartime silver nickels are like 56% copper, 35% silver, and 9% manganese. They're a little clunky, a little expensive to. They're three decent metals, but you got to separate three metals. It's a lot more work, a lot more energy. Philip Quinn is Louis the Benedict Arnold of silver. Yes, I left the church of silver. How dare I discuss cryptocurrencies or even gold? Someone's complaining, you used to cover silver. Some people say I cover silver too much. Some people say I cover cryptocurrencies too much. There's no such thing as too much or too little. All right. Now, DW says he tried to store his wealth in booze, but that didn't work out too well. Of course not. So when I did that other video about where you can park your money, I said stacking liquor is a good idea if you're not a drinker, because if you are, you're going to dip into your own supply. However, if you're a moderate drinker and you drink a certain amount of whiskey or whatever each month or each year, it makes total sense to go ahead and stack it, because whiskey's probably not going to get any cheaper. And spirits, if you have the top on tight, they're not going to evaporate. They're not going to change their tenor. Gold. Beer and wine, I guess it's gold. You can't really store a few years worth of that. Wine you can, but you still have to store it properly. It's got to be laid down. Just a quick tip. I know a guy on Twitter, he was saying he bought an expensive bottle of wine and then he opened it and the cork fell in and he had a problem and he didn't know what had happened. And I said, this is because the cork has to be in touch with the wine itself. And if the wine itself doesn't touch the cork can dry up and then boom. There was a guy, the reason I knew that, I'd read a story, someone bought one of Thomas Jefferson's wines. Paid like thousands of dollars. Literally, Thomas Jefferson, because he was a Renaissance man and he had wine and he had all kinds of stuff, famous things. And someone bought the wine and put it on their mantle, stood it up. Kind of to show off, hey, I got one of TJ's bottles of wine, which is pretty dangerous because it could have fallen. But that's not what happened. When he went to open it, the cork just turned to dust, and it's because he had not continued to have it laid down. The people who sold it to him should have told him that. All right. Butch Hardy's going to get a GameStop card. Coins AZ is here. Butch Harding, platinum looking hot. Yep, people are psyched about platinum. You're right. Philip Quinn, Warren Buffett, who I'm no fan of, is on the sidelines with dollar. What do you think his game plan is? You remember Warren Buffett in 1997 bought silver, 125 million ounces. Très intéressant. All right. Butch is making some comments here. Butchie Harding, he grabbed some of those 1/10 ounce Britannias for 98 each, and I see they're up at 140 now. Yeah, that's true. One thing I did talk about with James, and he couldn't confirm, was one, I asked him how much platinum are they actually selling at SD Bullion. He hadn't looked at the numbers. But the other is, I don't know if you buy physical platinum, what your odds are that when you go to sell it, you'll get something, a reasonable price for it. And then the reason why you might not is if the market isn't as liquid as silver or gold, then they may feel that, well, if we buy it back from you, we may have to hold it for a long time, so we're not going to pay you anywhere near the price you paid for it. I don't know if that's the case, but that's something to look into if you are buying. Check with your bullion dealer. The three that I have on the site are SD Bullion, Money Metals Exchange, and Golden Eagle Coin. Check their buyback policies on platinum if you are going to buy it, or check your local coin store if you're going to buy it, what their trade in platinum is, because some local coin stores probably don't sell any platinum in a given month or two, so I don't know. Philip Quinn says, when in doubt, buy Smaulgld Mugs. That is always the case. Yes, indeed. You can never have enough Smaulgld Mugs. That's right. Yesterday, Bullion Exchange put the new 2020 Perth Mint Platinum Brilliant Uncirculated Moose on sale, says Coins AZ. Within 90 minutes, they sold out. Wow, you got 3 of those. Very nice. Very nice. All right. Let's see. Fiona William, Christine Lagarde became president of the ECB. Run for the door, yeah? Yeah, she's doing the old Janet Yellen. We need highly accommodative monetary policy. Yep, that's what she wants to do. And Butchie's buying the gold eagles. They're right. And, of course, silver. DW, what happens if U.S. goes negative rates? Now, I have said, and I believed, that the U.S. would not go negative, at least not under current circumstances. Although, when I was saying that, Janet Yellen, before she left, was saying, before she was, actually, she said it before she was the Fed chair, that if she was on the board, she would be voting for negative interest rates. I think all banks love negative. Well, central banks like the tool of negative interest rates, but I think the U.S. has to consider, if it wants to have this ability to print debt and have people buy it, they can't really be offering a negative rate, because then what's the difference between buying a U.S. Treasury and some other government bond? However, the U.S. may decide it doesn't want to have the world's reserve currency. Trump may decide he wants a weaker currency, and then you might go negative. Very hard. My analysis, DW, is based on the U.S. not going negative, at least for a while, and that the rest of the world being negative to a greater degree, and that's going to drive the, I think, at least the gold, and then whatever follows from that, silver, platinum, and so on. Butch, have you watched Smaulgld's recent upload video focused on platinum? Now, I've done 2 recently. I did the James Henry Anderson interview yesterday. That's up on BitChute and YouTube. And then a few days earlier, I did one. They're both very similar, except if you're going to watch one, watch the one with James Henry Anderson, because I think it has all of the same charts and maybe a few more. On Smaulgld.com, you can see all the charts if you don't want to listen, or you can listen to it and while you're looking at the charts. So Smaulgld.com has all of those platinum charts to take a look at. Butch watched it this morning. I think it's the best bet out there, besides silver and some obscure metals. Yep. Now, Butch says nickel's been doing really well for my take on things. Yep, it has. And Butch is asking, DW's asking the question, does your local coin shop buy your palladium? That's exactly right. Tossing Molotovs, we already covered your comment. Maybe a little less time beating up the dummy pumpers. Nope, I'll spend as much time on that as I feel like. No, I just buy physical from AppMex and places like that. All right, Philip Quinn, negative interest rates in Europe. All right. Fiona Coins, I did the same. I listened to David McElvaney too much. He was suggesting to take profit from palladium at 800-900. Here's the thing about this channel. I don't tell you to do anything. I'm only trying to give you as much information as I have, but also to debunk a lot of stuff. Like, some people will tell you to buy something on the basis of something that I think is made up. When they're telling you to buy gold-backed yuan, it's going to create all this demand for gold because the petro yuan, and China's going to force Saudi Arabia to take the yuan in payment for oil, and then Saudi Arabia is going to take the yuan and buy gold with it. That's just made up. That's speculation. There's nothing wrong with speculation. But then every channel repeats it, and then gold set to skyrocket. No, that's not causing gold set to skyrocket. That's not happening, didn't happen, wasn't going to happen. So there you go. I'm bashing the pumpers again. And the problem is, I call them pumpers because every channel got clicks talking about the gold-backed yuan. And they've never corrected, oh, that was a stupid story. Now they go on to the next one. Game changer. All right, what else do we got here before we get off the line? Greg bought 4,000 ounces of silver at $7 in 2003. He knows a debt reset is an eventual and mathematical certainty. Well, maybe you don't know that, and maybe it might happen, and it might not happen for dozens of years. So who knows? But your instinct is certainly good, and your timing at $7 of silver is definitely good. I didn't have a job for 2 years, but was still able to buy $4,500 in silver. That's very good. Butch says, Silver Wolverine. Hello, Smaulgld. Silver Wolverine, you got to go check out his channel. Not a pumper channel, but a silver focus channel, which is good. We can't spend gold, same as we can't spend silver. You have an exchange both for fiat. That is correct. Coins has a quote, mug stackers and coin lovers, smash the like button. Yes, please. All right. Gypsy Tree, game over, baby. We're going to the moon. Dan SPL, the recent pop in silver and gold is yet to show in the miners' financial reports. Yes, because they're not going to report their earnings. I guess we're in September now. If they've reported their June earnings, you're not going to pick up the July, August, and September gains, and they won't be reported until October, November. Yeah, I don't touch mining stocks, discussing them. I follow them, but I think that's just... I'm going to focus more on macro issues than trying to pick winners and losers in the mining. I will throw out this, though, and it's not investment advice, but interesting. Check out streamers. I'm not even going to mention any names of them. What they do is they finance the miners, and in return, they get a below market price on the metals that mine produces. So sometimes they can do really well because they're getting gold for a few $100s an ounce, and then of course they can sell it, and they have no mining cost and they have no mining liability, and they do really well, those streamers, if they make the right deals. Downside is they don't own anything but contracts. All right, it's good to see Butchie's really participating tonight. Butchie Harding, I think he's new to this channel. Tossing Molotov. Talk about any white gray metal you want. I don't expect to buy much of anything but gold. Well, that's true. Yeah, and there are people that will stick to... Actually, I kind of follow that. I do believe that gold is... I'm not an absolutist, but I do think that is the more certain bet. Tricky Guy. Haven't seen him for years. Tricky Guy was a very familiar face on the Smaulgld channel. He says, years ago, Lou is the guy who got me to re-examine the promise of the pumpers. I bow unto thee. It was a tremendous solid done. But Tricky Guy, you will admit, I'm sure you'll admit, and this is the problem the Smaulgld channel has. People love to hear silver set to skyrocket. Silver is so useful in our lives. And every night there are people that go to these silver channels, go to these gold channels, go to these collapse channels, listening for confirmation bias, which never gets confirmed, that whatever story they're pumping is going to make them feel better, and it's going to get people into the metals, and they don't want to hear reality. No matter how people think that they are independent thinkers and they don't watch the mainstream media, they're not sheeple, and yet they slavishly listen to the pumpers because they think, well, they know what they're talking about because they understand gold and they must be smart because that whole story. And that's why people mindlessly started praising China. I mean, China, there's nothing to praise about China. I'm sorry. The Chinese, the way the government is run, not Chinese people are fine. But the government is nothing to praise. But because they are buying gold, they were smart and Sun Tzu and all this nonsense about how China is a productive economy. And it's all based on wanting to hear something that was telling them that gold was going to go higher. It's good to see Tricky Guy here back again. TW says, I agree. He opened my eyes to the pumper BS. But Tricky Guy's always made this point. We used to argue all the time. And here's where we disagreed. He used to say to me, but Lou, even though they're pumping, and even though they just make up total nonsense, some of them, they at least get you in and start you to stack. And I said, okay, but that's false pretenses. Because some people get in on the idea that they think they're going to get rich based on some nonsense story, and now they're holding on to a stack that they didn't buy for the right reason. So I never agreed with that. But I guess if you believe silver no matter what, you don't care what somebody says. They tell you silver's going to skyrocket because of some mathematical formula or because of some made-up story about some central bank or whatever. I don't think that's an acceptable way to get people into the metals. I think it's an unacceptable way to get clicks, an unacceptable way to sell metal. I think that's where Tricky Guy and I have parted ways on that particular point of view. CoinsAZ. Look at this. CoinsAZ writes a note, and YouTube hides it. I'm going to show it. It says, I've been an anti-silver pump-tard since 2012. See, the word tard, I guess, God forbid, the YouTube has to protect its community. Don't let the word tard in there. All right, Silver Wolverine, Tricky, love my stack. All right. Bingo, Tricky Guy says it's okay to love your stack as long as you don't start French kissing this stack. That would be improper. Very good point. It's Tricky Guy. Jack. I do the opposite of what Small says, and I have a fat stack of silver. What opposite do you do? Did I ever tell anyone not to buy silver? Did I ever tell everybody to buy silver? What opposite thing do you do, Jack? This is what people don't understand. I had a very interesting discussion with somebody. I was trying to explain to him, I don't want to spend too much time, is that JFK was not against the Fed. That JFK did not issue Red Seal notes because he was some anti-Fed crusader. And he just couldn't understand why I was taking this point of view. And I was taking the point of view because of the facts. Not because I liked the Fed. And he kept saying, you're promoting the Fed. I said, no, it's got nothing to do with it. It's the same thing. I didn't tell you to buy gold. I didn't tell you to buy silver. I didn't tell you to not buy. So people think that my comments are anti-silver. They're not. They're anti-pumper. In fact, I predicted silver would go higher this year in a big way. Not because I'm against it, but I didn't think it would go higher because of yoga pants. All right. Let's see what else we got. And Holloman, we talked about you earlier. Yes. Tossing Molotovs. The problem with gold doing a Forex cookie means the world will really suck. That is probably true. That is definitely true. Actually, the best thing that can happen is nothing collapses, but gold and silver go higher in a nice way. And you maintain your purchasing power and then some. CoinsAZ, I got to show your comment again. One can be strategically bullish on silver when time appropriate, not be a silver pump tard. I think that's what this channel is, isn't it? Tricky Guy, $30 an ounce silver, then I'm going to be a weak hand and take some profits, remove the risk from stacking, and therefore my stack will be entirely from profits. That's not a bad strategy, Tricky. Where to put fiat I take out? Well, that becomes the question. You don't know when and if silver hits 30, what the world will be like. You may say, oh, I'm not giving this up for anything. You don't know. You may say, I have to put it in gold. You may say, maybe at that point, the dollar is different. Maybe there is another reserve currency. Maybe there's something. Who knows? So it's hard to look at and say, when it hits a certain number, I'm out. You don't know why it's hit that number. Just keep that in mind, Tricky Guy. All right, so Anna's boarding up. I guess it's coming up. Butchie making some very nice comments. I can't read them all. But hope you come back. 1965 for silver. There you go, Ann. And it was I pointed out our conversation that we had on December 28th about silver going to $21. And you said, Lewis, is that true? Do you think it's going to go to $21? You said, I hope you're right. All right. Jack is right. I keep telling my dad to buy some gold. He keeps saying it's too risky. What does that even mean? Absolutely. All right. Tricky Guys. Trump. What is Trump doing about gold? Any policy that has actual heft? No, although he tried to promote two people to the Fed, Herman Cocaine and can't remember the other guy's name. He wasn't really a gold standard guy. He was a commodity standard guy. Herman Cain is a gold standard guy. Now he's looking at promoting this other woman, but he hasn't really done much for gold. Butch Firearms. By the way, I don't know if you guys saw that Walmart and Kroger's, two stores I've never been in, have told their patrons do not bring your open carry firearms and that they're going to stop selling pretty much most firearms, weapons, ammunition, even pistols. So big news on that front. Ammo 2, yes. Smaulgld, thanks for answering my question on negative rates. I don't remember the question, but I hope I answered it fine. And Cecilia, I think Ann is in favor of this. She likes these live things. I don't think she would like it as much just to have a private. But again, it's nice that people like this, but of course you have to make Smaulgld happy as well. Because, well, as much as I enjoy it, it is a lot of A lot of work for $90 a month. All right. I think everyone's taken off now. Yeah, silver, wheat, and precious metals. Tricky Guy and I are bantering, and I think we're about done. Yeah, I said about... Well, it wasn't Walgreens. It was Kroger's. I don't know what it was. Anyway. All right. Internet Tough Guy. He's a new guy here, too. It's good to see him here. So, all right, everyone. Well, I want to thank you very much for joining me. And as I say, I may not keep coming on every night, and so it is all dependent. I mean, other channels have pushed the patron route or pushed the donation route, and they don't have 21. They have a lot more. And again, I do appreciate the 21, and I do appreciate the one-offs and the very generous and very good audience that we do have here. But it is this very small amount for the work put in. But anyway, not complaining. Enjoyed seeing you guys tonight, and we'll maybe see you tomorrow. Check us out at Smaulgld and BitChute.